Monday, April 21st, market analysis. Good morning, Stan Ehrlich. I always start out with stock indexes, go to futures, and occasionally a variety of other subjects. And I've got a couple stocks I've been monitoring for a couple of months plus. Apple is one of them. So, hope you had a good Easter weekend. We are breaking down significantly today. We're down approximately 14 points, or that's SPY points, or 140 on the E-mini or MES, micro E-mini scale. The important part is we're making new lows for the last 1, 2, 3, 4, 5. This is the lowest low in the last 6 days, maybe even 7 if we get a little bit lower. Probably the lowest close for at least a week and a half-ish. And there's no expectation anymore on my part that we're going to have one more rally like I was looking for last week. So that's gone. Market couldn't hold, didn't hold, and we are having a lot more bearish activity quicker than I would have normally expected. I think we're going to test the lows of the trend, the lows that were made only a few weeks ago, a couple of weeks ago, on April 7th. Now that is down around 48.35-ish. It could happen this week. It could happen very quickly. Please remember bear moves. I don't want to say bear market yet. Bear moves and bear markets for that matter come down much faster than bull moves go up or bull markets go up. Bull markets are traditionally said to climb a wall of worry. Bear moves or bear markets panic. They go down very quickly and sharply. So don't turn your back on bear markets in particular or bear moves. We are down 15 at the moment. We could easily be and have been only in the last couple of weeks down 20 or more in a matter of an hour or two. I'm not saying that's going to happen. I'm just saying watch out. It could. It's under these kinds of circumstances that the market can fall apart very substantially, very quickly, and consistently. Let's go to the 5-minute chart on the E-mini. And you can see that it's dropped off very sharply, in particular, since about 6:30 last 3 hours, just a little bit after the regular traditional opening at 6:30 California time. Yep, slightly after that, stopped dropping even faster. Overnight, of course, it sank significantly in the first place. So we have made these new lows, and we're very, very close to making a low lower than that low, and that was on April 10th. There is not a lot of technical support under this market. It could just collapse. Let's look at the spider. SPY is going to be the same thing, except for gaps and the fact that it trades only 6:30 to 1 o'clock California time, traditional market hours. It's not a futures contract, and it does not trade 23 hours a day like the spider. Well, this is the spider 5-minute, sorry. It gapped down this morning, and I keep telling you, and it's true, gaps are almost always closed. Now, this gap doesn't look like it's going to get closed. A lot of other gaps that I've pointed out over the last approximate 2.5 years that I've done over 600 of these recordings, most of those gaps have been closed, some of them very accurately. So the gap down this morning, and it's a fresh gap. So I think there's a good chance that we could come back to that, but I'm not trusting any rallies. I've said that again and again and again for the last week or 2 or 3. Even though I was expecting it, I didn't get it, and kaboom, looking for lower levels and pretty damn quickly. Now, the NASDAQ QQQ has a new low, even lower than April 10th, and it also had a bullish engulfing at the bottom that worked out very well. That bullish engulfing was on a Monday. All of the other indexes had a Wednesday bullish engulfing that did not necessarily have any major follow-through. Now, ER1 scalp made very, very good money, huge scalp money on Wednesday, the 9th. So a whopper of a day for my ER1 scalping strategy. Not so good the previous Monday. That was not good. Pretty bad. But I made 5 times more on Wednesday, April 9th, than April 7th. Loss. Okay, new lows, breaking out of a support area. I expect it to test the next support area and the previous low for the move, which is around 402. And ladies and gentlemen, I've got to go back to the E-mini for a moment. How bearish is this situation, maybe? I'm looking at the much bigger picture here, rescaling things, showing you the longer term charts. Let's pull this up some. Let's go like this. Here we go. So the next major long-term support area is about 44.85 for the E-mini, and then a profoundly important long-term one around 4,100, I'll say. Yeah, around a little bit lower, but around 4,100, which is, of course, a incredible big move down. I am afraid to say there's a chance, in my opinion, that the market could get there. So going back to the NASDAQ, let's take a look at it the same way, long term, and rescale the chart here. The major long-term support is 12, let's call it 12,700, 12,690, 700 is good. A huge move from where we are, even below the low we saw a couple of weeks ago. Huge move down. So if we can't turn around and show some bullish developments of significance, I've got to expect to see a lot lower levels. I don't see any way around it at the moment, technically. And we think we know why, but that's not necessarily true. Okay, next chart. NASDAQ, 5-minute, bouncing a little bit. What can I say? There's nothing here that causes me to scream buy it. The YM is getting closer to its major lows, recent major lows. Basically the reversals or the bottoms that happened on April 7th and April 9th. Quicker than the other indexes. The Russells and the YM are holding up the best. The YM's dropping off the quickest at the moment. The Russell is holding up the best. And we'll see that in a moment. So all the support is going away. All we have left is really the trading ranges for 3 days and the bottoms that we had. I am not going to be terribly surprised if we get down to that level really quickly. YM 5-minute chart just doesn't seem to do anything for me from a bullish standpoint. Yeah, we're not even oversold. Russell, daily, minor new low for the last 5 or 6 days or so, not making a low yet below April 11th, and is furthest away from a major support area, which held, and it bottomed out at the bottom of the support area, which is great. And it is a profoundly important long-term multi-year support area. So it held with a bullish engulfing. Great. But there's no bull move developing after the engulfing bullish signal. Not good at all. I don't see it coming yet. Now, if some surprise, and you know what it might be, all of a sudden happens, all bets are off, and we may end up with a big bullish engulfing, a buy signal, but it won't be an ER green. And I'll start talking about the upside potentials again, but I don't see it. 5-minute chart on the Russell, starting to make lower lows. Okay, bonds. dropping like a rock here. Sharply lower, 42 lower. I think it's going to come down and test these support levels. That implies rates are up, going up. And it could challenge that major long-term bull trend line. Now, so far, we do have the makings for a very broad double bottom. The first low was a bullish engulfing arrow buy signal and a whopper on October 23 of 2023. A huge buy signal, of course, after the fact, but a buy signal at the bottom, not after the fact. The day it happened. I talked about it. Go back and listen to my recordings. If it happened after my recording, then I talk about it the next day. We also have another bullish engulfing on January 14th of 25, earlier this year. And those two represent to me a relatively sloppy, but I think double bottom formation could very well be appropriate formation to talk about. So I'm now thinking it's going to be in major jeopardy. So I've got to watch carefully. We're not oversold. We do have support. It's going to come down some more. Notes of the same thing essentially, but not dropping anywhere near as fast. But they did drop below a little support this morning. They did make a new low for just a couple of minor days. It does have a major reversal, again, like bonds, on October 23 of 2023, and a low at almost exactly the same prices January 13th of 25, but it was not a bullish engulfing, unfortunately, like in bonds. Now, those two lows are very close to the exact same price, and an extremely good example of a potential broad double bottom. But the most recent ER signals that we've gotten, both in bonds and notes, have been a sell signal that is working very nicely. If you develop a trading system, it's because you believe that the trading system produces signals that makes you money over time. Of course, the more, the faster, the better, of course. I believe these signals make money over time, period, or I wouldn't be showing them to you. And I know they do, especially ER1 scalp. It's pretty unbelievable. Someday I'll show it to you, but I haven't quite gotten that level, so I'm waiting. But it's, I've been doing this 53 years. It's shockingly good, sincerely, really. All right, now, that signal worked. I didn't expect it to. I didn't want to see it. I didn't want it to happen. It did happen, and it still worked excellent. Okay, notes. I'm sorry, crude oil. Buy signal to bottom. We got another one last Thursday. Popped into new high ground on Friday. We're having a bit of a retracement, a bit of a dip today. We are in a support and resistance area, so we got to deal with that. But I'm thinking it's going to hold, turn around and start to rally into minor new highs. Getting above 64.38 is going to be a bit of a barrier to overcome. Couldn't do it on Friday. And today, Tuesday, remember we had a 3-day weekend. Sunday was Easter. Friday was the holiday. Sorry, that was last Thursday. So couldn't do it last Thursday and pull back today. Not really looking for lower lows. I'm looking for it to hold and turn around and make new highs. What about heating oil? On Thursday, we made a new high. It had two buy signals lately, one of which is the very lowest low at a support level. Great signal, including a retracement into the approximate middle of the range within a few days for ER3 to get filled, and up you went. So I like the looks of this in general. It's just having a little bit of a bad day. I think it's going to turn around and make new highs. And what about natural gas? Totally the opposite. We have had a head and shoulder top formation. First shoulder was on February 20th of this year. And then we had March 10th for the head of the formation and the rally high on March 19th. Yeah. Broke out to the downside, tested the neckline, made new lows. We had a buy signal. I said I didn't want it to work, and it didn't, but the buy signal is automatically bought by the system. It's automated, and it was a losing trade. but I don't stick around to lose a lot. My stops come up sometimes every few minutes, if not even faster, but typically it might take an hour or maybe a little less, a little more. So moving several times in a single day is not uncommon at all. We are now almost to my minimum downside objective of I'm talking about for weeks, ever since at least about the 20th of March. Let's call it a month exactly. So we're about finished with that head and shoulder top downside objective of 29.75, 2.975, a little below 3. And here we are, 3.052, 0.074, almost low and last. Looks like it's going to make new lows. But this is an ideal situation for a potential bottom. You're reaching downside objectives and you are oversold for the first time now for a while. I think it's going to reach its objective this week and maybe even turn around and start to go back up some this week. Look at gold, silver, platinum, copper. Then we got the grains and meats. Gold is screaming into new high ground, getting significantly overbought, now in the 81 range. Anything in the 80s is very overbought. If you get into the 90s, which is fairly rare, I start screaming about the top having happened minutes ago and or within the next couple of hours within that day, likely. But we're not there. We're at 82-ish, 81 and a quarter, and very overbought. So it could go up some more. I'm not getting bearish yet, but I'm certainly looking for sell signals. And if you were long, I'd be tightening my stops up relatively tight, very tight, and watching for sell signals. Silver couldn't make it higher high. Wednesday was the high. Thursday, it started to dip down a little bit in general. Today, it's still having a little trouble. No new high. Resistance area. I think there's a chance it still could come up a little bit more, but we're not overbought. We're in no man's land around 55 for RSI. Short-term trend is obviously up after being very oversold. 13 is extremely oversold. So I'm looking for probably a move up still. Next is platinum. We did make a minor new high in platinum. We did have two buy signals close to the bottom. Of course, both are working at the moment very, very nicely. Although we are net lower on the day right now, I just don't see this as being a major top at the moment. Granted, we are in a resistance area that's fairly wide, sloppy, but I can't pin it down to a very narrow level very easily. So I still like it. Up. Copper, new high by a lot. Currently slightly lower on the day for the current tick. Need to wait for an update for, there we go, negative 225, 0.225. So there's a chance that these things could be turning down. I can't tell yet, honestly. I don't have much to go on. I think it's still going to work a bit higher. Okay, grain. Now, you know I've been trying to justify an intermediate to long-term bottom. In fact, maybe a very long-term bottom. We do have a potential bottom in soybeans. You could call it a double bottom. You might even call it a head and shoulder. I've lost my markers here for the shoulders and stuff, so I'll put them in later. The neckline would be almost dead flat. We challenged it back here on February 5th, pulled back to support. It held and created what could be called the last shoulder low. But it's so, excuse me, so close to the lowest low back in December that you could also call it a double bottom. Now, because of the way this formation is developing, the upside objective on either the double bottom or the head and shoulder is really not much different. A lot higher, and I'll put those markings back in. Somehow they disappeared. Here we go with corn. Oil, soybean oil. Sorry, corn looks similar. Soybean oil has the double shoulder, head and shoulder bottom. I didn't draw on the neckline. That would be a mistake. Okay, after the first low, here we go. There is the pivot point, and there is the neckline. And here we go with the down upside measurement. Take the lowest low straight up to the neckline, just like that. That's the depth of the formation. I'm grabbing the line, and I'm going to pretend it's going to break out sometime in the near future, which is going to be adjusted, I'm sure, but way up to 62 or 63 is the minimum upside objective on this pattern, which is doing very, very well. We have had a new high for the last couple of weeks today. We're coming very close to this short-term minor breakout, which should cause a lot more strength on the upside if we start closing above 49. Those two highs. That's going to cause it, in my opinion, to rush up to 51, which of course is the neckline on the big, big, big pattern, and a whopping big long-term move should start if everything works out normally. Could be a big one. Soybean meal and wheat are giving me problems. Now, meal's down on the day a bit. No lower lows of any consequence, no higher highs of any consequence. It rallied up to resistance area and stopped and started to turn down. Every rally we've seen here from months and quarters and half years and years has been at lower levels on the rallies, and the lows have been periodically lower than previous lows. That basically defines a bear trend, which it is. We've got to start closing above resistance, above 311, have some dips that hold, and start to see higher highs on the short-term, intermediate-term rallies. It's not happening. Soybean meal so far has not really given me the signals that I want to make my mouth say bullish things about it. It just ain't happening. What about corn? It is. We have seen higher highs for over a month. We have seen a minor double bottom we broke out of with a low, second low being a bullish engulfing air, a buy signal. And that was just recently, March 28th. Great. I am looking for this pattern to continue, like soybean oil, which is coming along great. Corn's coming along pretty good right behind it. And soybeans should start to, follow through. But meal and wheat need some real strength. This is corn, looking for higher levels. I see I lost my RSI for some reason. That's crazy. Okay, I'll put it back in later. Next. And here I've lost my RSI too for wheat. That's not good. But I can tell you by looking at the price colors that we did get oversold a little bit here. These lows, just in the last week or two, are the lowest lows since the war began back when wheat topped out March 8th of 22, with a bearish engulfing ER sell signal on the exact double limit up to limit down day. A whopper of a sell signal. Unbelievable. The best I've seen in years, if not decades. So is this bottoming out? I'd love to say I've got evidence that it looks like it. It's coming up to resistance, stopping, and I just can't justify upside follow through yet. Next, cattle. New high for the rally. We got a buy signal at the very bottom. Perfect. April 9th. We also got a buy signal at the bottom of that break, March 4th. Perfect. Sell signal on a double top, the first high. I like it when it happens on the second one. I got to look for a new high for the trend here. We're not overbought. We have upside potential. I don't think it's topping out. Looking for higher levels. Hogs have got a problem. I'm not sure what happened here late last week. We were getting some goofy price action in here, and I don't believe that's a legitimate buy signal a couple of days ago, the green. So I'm going to pass on hogs for the moment until I can figure out what went wrong. Bad data, I think. Shell is the first of two stocks. We did get a buy signal at the exact low on April 9th. outside up day, bullish engulfing in an oversold condition. There's my RSI. It didn't disappear. Good. And I did talk about the divergence top with the bearish engulfing. Actually, it was a bullish engulfing, and it was one of my bass backwards. So that worked very spectacularly, but I'm not sure what to do with this signal in general. I don't mention it very often. That's my classic in resistance, bearish engulfing, August 1st of 24. So we got a buy signal at the bottom so far on Shell, and it's been a very nice rally. Not fabulous, but good. We gapped up last week, so we're starting to come down a little bit to close the gap. If we get down to 63.40, let's call it, it'll close the gap. What happens next? Usually, if it's a very good bull trend, it's going to stop right about that price level and turn right back up again. We'll see what happens. I'm very skeptical about talking bullish in the stock market at the moment because all the indexes are doing terrible. In fact, I'm about to go after Apple, which did not give me a buy signal at the bottom, unfortunately, did rally back up to a little bit of resistance and is now starting to make minor new lows. It also gapped down very slightly, a very small gap between today's high and Thursday's low over a 3-day weekend. There's also a gap way up here. I'm concerned that these things are not going to close their gaps and they're going to keep on slipping. And that's why the E-mini has just made new lows again. The spider right behind. QQQ. I'm going to skip. NASDAQ. New lows for the morning. This session. As we speak. YM. Dow Jones. New lows as we speak. You guys have a great day and profitable trading to you.